Hey, what's going on, guys? Welcome back to the channel. In today's video, what we're going to be discussing is the drawbacks to dividend investing. And if you know me, you know up front, dividend investing is definitely one of my favorite investment styles, but there are a lot of people who steer clear from dividend investing for a number of reasons. I'm going to be discussing all of those in this video. So if you're considering, should I invest in dividend companies? Maybe I want to go a different avenue. Well, this is a great video for you. So without further ado, let's jump right in. All right, guys, listen, if you are brand new to this channel, you're just coming here for the first time, well, I just want to say welcome. My name is Dalton. This is dlitztv. On this channel, we talk about all things investing. And in a lot of my previous videos, I talk about the different dividend investments I'm making, why I'm making them, and I really talk about the pros of dividend investing. I really haven't focused on the cons and why people might steer clear from dividend investing. So that is definitely the emphasis that I wanted to make in this video here today. I'm going to be giving you a little bit of both sides, talking about my rationale behind dividend investing. And then at the end of the day, it's your decision what you want to do as an investor. Just because I love dividend investing, I think it's the best method for me, doesn't mean that it's the same for you. So just know that when you're pretty open about your investments online, people aren't going to line up with how you're thinking. If you were to share your investment style, there's definitely some flaws with every style out there. So just keep that in mind. And yeah, let's just jump right in. The first thing that I want to cover when it comes to a drawback for dividend investing is that dividends are not guaranteed. So what I mean by this is there is no set contract in place, right? There's no contractual statement that says that these companies actually need to pay you these dividend payments going forward. So you may invest in a dividend company one day, and then a few months down the line, they're like, all right, we're not going to pay any more dividends. Well, they can do that. But the way that you combat this, and what I typically do, is invest in things like dividend aristocrats, which have a history of increasing their dividend payments over the past 25 years consecutively, or even dividend kings, which have been increasing their payments for the past 50 years consecutively. And what this does is, like, it's a tough category to get into. So a lot of times the companies that make their way into these are really well-established blue chip companies that have a proven track record that can continually increase their dividend payment. And they don't want to leave this category because it's a prestigious one to get into. And once they're in it, they try and maintain it as long as possible. So it seems to be a bit uncommon for these companies to enter in as dividend aristocrats, work their way up to dividend kings, and then all of a sudden stop paying dividends and they leave those categories. Another way that you can combat this is just by investing in a solid dividend ETF. Now, these dividend ETFs will automatically rebalance, take out companies that refuse or haven't been paying dividends, or maybe the dividend payment isn't high enough, and it will substitute them in for other companies, and it will manage itself. So that's another route you could go to avoid when dividends aren't being paid. But the reason why this is such a big drawback is maybe you are retired and you are reliant on dividend income to help pay your bills, or maybe you're using it to be financially free to cover all your living expenses. And if a company just all of a sudden announces that they're going to not pay you a dividend, well, this becomes an issue. Now you need to think about reallocating your funds, maybe move it into different dividend companies, or perhaps sell off some of your stocks in order to pay for those expenses that you have coming up. And so even though dividends aren't guaranteed, I also want to say that growth isn't guaranteed as well. If you take a look back at 2008 during the housing crisis, when the stock market crashed and people, were investing in even growth companies back then, some people had to, push off their retirement indefinitely because of the huge dips, the panic selling that was going on, and a lot of people didn't know how to react to the stock market. So even though sometimes growth investing shows like some higher results, this isn't the same over every single time period. And it's really important to know that if you're investing in companies and you decide, their value's dropping a ton, and you panic and you sell and you recognize this loss that's harder to make back, what actually happens for dividend investors is as the company's valuation drops in price, usually the dividend is going to adjust. So let's say you're making a 50-cent dividend on a $20 company here in this scenario, and the company valuation drops all the way down to $15. Well, it's going to adjust and you're still going to be paid that 50-cent dividend. So it incentivizes more investors to stay investing with them, and it pulls more investors in because they recognize that they're still going to be getting stable income regardless of what's happening on the stock market. Now, another thing you want to look at as a drawback when it comes to dividend investing is that making these dividend payments for these companies actually can hinder growth. So if you think about it from a holistic standpoint, when you look at this payment, basically what they're saying is they can't find a way to utilize this money in order to further grow the company. So when you look at companies like Tesla or Amazon, for example, they put every dollar to use and try and grow their company. You look at the innovations that they do. Amazon, they've done so much for the e-commerce industry and just growing from literally like nothing to where they're at today. And they're exploring different options such as drone deliveries. And there's so much more going on in the back end that they can really utilize all the money that's being invested into their company. Now, if you look at something like Coca-Cola, for example, where they've explored a lot of different avenues, they actually find that it's better to incentivize investors to come and invest in their company and actually pay them back a portion of their profit. Now, a lot of times this helps to retain value while also paying back a dividend payment. But what I've found is that people who are focused on investing in growth stocks, primarily looking at that overall growth, they seem to dismiss the fact that a lot of these dividend companies continue growing as well. So for example, in my own personal portfolio, some of my biggest returns come from dividend stocks that I bought during a market dip. So for example, an ETF, SPHD, where people are like, this is just a stable value ETF, I'm up around 15% on that ETF alone, where most people wouldn't see that return for a very long time. I mean, it only took a few months for me to get that 15% return, and it's a relatively stable ETF, so I don't necessarily see it dropping as quickly in the future. And all along, I've been getting dividend payments from it as well, and I've been able to reinvest them back into the ETF and continue growing and enhancing my position in my portfolio. So the third thing that I want to talk about, and this is honestly what I think is the best argument to be made against dividend investing, and that is that dividend investing is actually not free. It actually costs some money along the way, but there are a number of different benefits that come along with that cost. So first off, when you look at it, you look at the stock price, and let's say that you were investing in a company that was worth $20 on the market. Now, they then announce that they're going to pay a 50-cent dividend per share, and then you're going to see that reflected in the stock price. What's likely going to happen is that it's going to drop by the announcement of the dividend. So for example, with that $20 stock, if they announced a 50-cent dividend, they'd now be worth $19.50. But what I'd like to say is that this isn't always the case. And there's a lot of external factors that come into valuating a stock and figuring out what the stock price is worth. So even though they announce this dividend, it's not always the case that it's going to drop in value off the top of the stock, right off that $20 stock. But let's say that the dividend is announced, a few different things happen, and the stock's now worth $21. Well, it's probably safe to say that if that dividend wasn't paid, it might be worth something like $21.50. So just keep that in mind when it comes to dividend investing. And then also something very important to consider is these are essentially forced withdrawals from your account. So when you look at a forced withdrawal, what's happening is you're actually taxed on top of that. It's definitely something that can add up over time. Later on, when you retire, it's safe to say that you're probably cutting back on how much money you're earning, and so your tax rate may be subject to change. Now, one of the best things about dividend investing, especially at that retirement age, is that you could actually be paying nothing for the dividends that are being paid to you. So for example, the chart on the screen is going to cover the payments that you will need to make based on your tax bracket. So if you are single and you are making less than $39,375, you are paying absolutely nothing on the gains from dividends. If you are filing jointly and you make $78,750 or less, you are again paying nothing on top of the gains for the dividend payments. Now, anything above that mark, you're going to be taxed at either 15 or 20%, depending on your respective category that you fall within. But again, to combat all of this and to make the argument again for dividend investing, it's that you do not need to worry about any of the taxes if you're investing in a tax advantaged account, such as a Roth IRA, where all of the money that you're investing and all of the dividend payments that you received is going to grow completely tax free. And so the next topic that I want to cover is that dividend investing actually decreases diversification within your portfolio. And the reason why it does this is because you tend to invest in those more well-established blue chip companies with really high market caps. So what happens is you may not get that full branch of investing with those small to mid cap stocks that have more growth potential. But at the end of the day, the most important thing to be aware of is it's not like you're choosing one thing or another. You can be a dividend investor while also investing in growth companies. You can be more growth oriented. Right now, my portfolio weight is, pretty significantly on the dividend investing side, but I do also have a growth portfolio that I continually add funds into as well. And though, again, my favorite style is dividend investing, it doesn't mean that I've limited myself to just investing in that manner. And lastly, what I want to talk about is just the peace of mind you gain from dividend investing. So I don't really need to worry about my stocks. A lot of times they're maintaining their value, and actually currently, as the stock market continues to go up, when I was buying in during the market dip, a lot of these stocks are having a pretty solid return. Now my portfolio, and when it comes to investing in dividend investing, I'm focused on the very long term. Now, if I was focused on making quick money and trying to, figure out the stock market in the short term, it's more than likely that I'd be targeting these high risk, high volatility stocks aside from dividend investing. But for my style, with the peace of mind that dividend investing offers to me, I can sleep very comfortably knowing that I'm not going to wake up to huge market fluctuations in my portfolio. And even when the market wasn't doing so hot, my portfolio was still going up based on the investments that I've made. And so guys, at the end of the day, again, it is completely your decision to decide how you want to invest your money. Now, I myself, I love dividend investing, but again, I do practice other methods as well. And, like I said at the beginning, people are going to hate your method. People are going to love your method. That's just how it goes when you are sharing it online. So let me know your thoughts. Are you team dividend or not? I'd be eager to know. And anyways, guys, thank you so much for checking out this video. If you took anything away, hit that like button and have a great day.